Welcome to the Rick Helps Real Estate Show. Once again, the Traveling Roadshow edition from the Rick Helps Real Estate RV. Traveling but still working. Why haven't we crashed yet? And I know there's a lot of you out there. I get comments, we're going to crash 50 to 60%, but tell me why. Tell me how it's going to happen. Real estate's not going to crash just because prices are too high. They will adjust. Things always adjust down to a median price or an increase in income, whether you're buying cars, a house, I don't want to say groceries, but prices will adjust. They can, but we're not going to crash. And especially compared to 2008, I've gone over that ad nauseum. But I want to show you what's going on now and show you why I truly believe that and what I'm looking for that'll make me say, oops, here it comes. It's looking bad. Because just a comment that says it's got to come down 50, 60%, that's not analysis. That's just wishing and hoping. And markets aren't driven on wishes and hopes. But here's where we are. This is our active listings. If we're going to have a crash, we're going to have this fly up. This inventory number is going to have to climb. Now, is that something I just made up? No, look what happened in 2007. We ended up with 53,000, 54,000 here. We peaked at about 58,000 listings. 2006, they started climbing. Then it kind of went down a little bit. 2008, they stayed there. Normal for our market is about 27,000 listings. So we're sitting here today, we're actually below 24,000. We're at 23,900. That's got to change. That has to change. So you have to say, well, what's the catalyst that's going to make people throw all their homes on the market? Well, first of all, a lot of sellers in January gave it the old college try and said, well, let me see what I can get for my house. Sitting around the kitchen table going, according to Zillow and everything else I look up, our house is worth this. Why don't we try selling it? And gosh, if we do get that price, let's move. If not, stay here. So they tried. I like to say they came, they saw, they went. Everybody had this wave of optimism in January that wasn't there prior, because November, you remember what was going to happen in November? Everybody's, I'm waiting until after the election. I don't know what's going to happen. Well, guess what? Nothing changed. Nothing changed in 2020. Nothing changed in 2016. Elections don't affect the cycle in real estate that's already present. If real estate prices are going down, you have an election, they're still going down. Now, over time, they will change depending on policies. But right now, we're not seeing anything that's radically different. But that wave of optimism showed up in January. Here came all the listings. And we saw that in this chart here. We could see in January, they started showing up. Well, then what happened? We started seeing expireds. People listed their homes, for 90 days and said, well, gosh, I guess that number we thought we were going to get, we're not going to get. Well, let's stay here. We'll wait another year. We'll see what happens. We'll give it another try. There's no desperation. Until you have desperation, you will not have crash. Now there's talk, well, we're going to have this major recession. Okay, well, I don't see it yet. I don't see it on the horizon. Just because we have recession doesn't mean that real estate prices come down. In fact, a recession is just negative GDP growth over a couple quarters. I think it's 3 quarters, 3 in a row. That's counted as a recession. By the time you see that and it's been declared, you've already lived through it. And that's usually when rates go down. So the big rate debate is still going on. The CPI numbers came out today. They said they were better than expected, and the rates didn't even budge. They just kind of stayed put. We're stuck in this line. We're seeing our inventory starting to level off a little bit now. People are not putting more homes on the market. And I track that every day. I look at my 7-day moving average, and I'll show you what I talk about here. And this is the big yellow bold area there is the number of new listings, and the black line that's pretty flat is number of contracts over a 7-day period. These big dips, those are holidays. These other big dips are expireds at the end of the month. See the gap, the white area here? That means we have more contracts than we had new listings. Prices don't go down when you have that kind of an inversion. Over here, we had more listings than we had contracts. There was some pricing pressure on the downside. It's the same over here at the beginning of the year. More new listings. Everybody was confident. It was January. Here we go. Sales didn't follow it. This is the optimistic group. We're going to sell our house, and buyers are going, well, no, we're not playing. We can't afford it. We're staying out. But the thing is, it hasn't broken below this floor of about 2,700 homes. In fact, today we have 2,702 new listings on the market over the past 7 days and 2,700 contracts. Only a difference of 2 homes in a 7-day period. That doesn't move the bar either way. That doesn't make it go up or down. It's staying right there. If you look at our average sales, and I removed anything over $1.5 million just to see what's going on. And here's what we're looking at. These monthly average sales price per square foot actually went from $259 up to, I was saying here, $256 to $258. Went up $2 a square foot. Now, if I include everybody, the chart looks radically different. Let me grab that for you here. It shows a big dip, and that's happening up in the higher end, not because average sales prices are declining in the higher end. It just means that we're selling fewer of them because it's summertime. But it's not looking bleak. I keep using the bleak word a lot. It's not looking that way. And then if we look, there's a new map that came out. It's new to me. Here's a national map here. It shows appreciation or lack thereof by zip code nationally. See all these blue and dark blue areas here? That's where real estate prices have gone up this year. Here's Florida and Texas, and us, real estate prices have gone down. If we zoom in, and they've gone down, you know why? Interest rates are higher. They're not high. They're just higher in relationship to the sales price of the home. We got to see that kind of mediate out over time. And we need a financial crisis, folks. I sound like a broken record, but you need a financial crisis to upset the real estate market. Right now, if you look here and you look at Phoenix, minus 3.4% in zip code 85041. Get down here to, where's this? This is Phoenix down to 5.2%. Chandler down 3.3. That little QR code that you see up in the corner, that will take you, so you can get a zip code report for your zip code. A market report. It's going to give you far more detail than this. But you're not seeing anything much over 5% when it comes to a decline by city, according to this national chart. You get some of the outlying areas. At Phoenix, we're down 5. Goodyear is down, what's it showing me here when I hover above there? Down 2.1. Surprise, down 3.9. Let's go way out in Southeast Valley, down the Santan Valley here. They're down 3.2. Queen Creek down 1.9. The wheels have not fallen off the wagon. So it's pretty slow and steady. Slow, steady Eddie. Interest rates, a lot of pressure for rates to go down in September when the board meets again. And so now everybody's got another reason to wait. Everybody always gravitates to a reason to say, well, I'm going to wait. Now, I'm not trying to create any FOMO here. And I think if rates do go down, we're still not going to see that. You're going to have some agents tell you if rates go down, buyers are going to come out in droves, and here we go again. That's going to have to be a heck of a rate reduction for that to happen. I don't see it. I see more of the same. We're sitting at about 6.57 today. I think if we're lucky, we might get down to 6.4. That's been the prediction all year anyway. I just don't see that coming down the road. In fact, if I look at our rates that we have today, and this is after we got the CPI report, which is favorable, it didn't budge. 6.58. It didn't move a notch. We stayed right there. So the bond market has already anticipated inflation to be in check. It's already anticipated that there's going to be 1, maybe 2 rate cuts in September, a 0.25 or a 0.50. They've taken that into consideration. It's priced in. So how much lower could it go? We don't know. We're going to watch. But because of the uncertainty, what are the tariffs going to do? What are the rates going to do? By just sitting there. But when I say sitting there, lowball offers are not getting attention. We are seeing an increase in seller contributions. 57% of the listings are contributing towards either a rate buy down closing costs, but we're not seeing massive price reductions. Maybe that's the same thing, huh? They're giving you $15,000 instead of lowering the price by $15,000. But if you see something that's, I'll say, 650,000, they're not going to entertain an offer at 610 unless they absolutely had to because they have to sell and they've got a lot of equity and they need to get out from underneath it. It was a divorce, then maybe. But you got to know the situation when you're writing the offer. 43% of the homes out there don't have a mortgage. So there are people that bought in 2022. Yes, if they were to sell now, they're upside down, probably, if they didn't put much down. That's going to happen if you buy and try to sell within a 2 or 3 year period anyway. Those days of 2021, buying a house at 2021 in January and selling it in March and turning a profit are gone. They're long gone. Those days of listing your house and seeing an offer showing up in 2 or 3 days, that's also gone. The people didn't believe that in January. They still thought sales were brisk. So now we've normalized. We're in a buyer's market in most of the country here, most of the area here in Phoenix. The seller's market in a few, Paradise Valley, actually Chandler, and I think it's Cave Creek, excuse me. So they're in a seller's market, I mean, more advantageous for sellers. Again, it's a measure between supply and demand. So to deliver this crash you want that you're looking for, watch that number. That has to grow exponentially. There has to be a catalyst. There has to be a financial situation. There has to be something going on. In 2008, you all know why that happened. There's no sense in going into it. We're not seeing any of that being repeated now. So I think, especially, I'm just talking this year. I can't predict out next year. I have no idea. I'm just a realtor that looks at numbers. I'm not an economist. And the economists that are out there, they still haven't got it right. Every prediction gets rewritten. Zillow rewrote, Realtor.com rewrote. This year, more of the same. It's going to be slow. Buyers, yeah, some of you are finding some bargains out there. Sellers, some of you are trying, not doing so well. Some of you are getting surprised. Ooh, guess what? Looks like a normal market to me. If you have any questions, shoot me an email, rick@rickhelps.com. And don't forget to click that link down below to get either your zip code report or sign up for my weekly email. Take care, everybody.